let's start with that $20 billion takeover of Australia's second biggest energy retailer, Origin Energy, which today officially fell over as enough shareholders at the company's extraordinary general meeting voted against the deal. Brookfield and EIG made the offer, along with a commitment to spend another $30 billion in the coming decades to fund Origin's transition to renewable energy sources. But the takeover was especially opposed by Australia's biggest superannuation fund, Australian Super, which bought 17% of Origin shares. And today, as the takeover was voted down, shareholders in the room expressed their approval.
I would like to recognise that the scheme has not been approved by the requisite majorities today. Based on the preliminary results of the meeting, approximately 69% of the votes were cast in favour. The thresholds for scheme approvals are clear. It required a 75% majority. And as a result, Origin will continue as an independent ASX-listed company.
Scott Perkins, the chair of Origin there. It should be noted that almost 67% of the shares were voted in favour of the deal, but it needed a majority of 75% to succeed. Brookfield and EIG had subsequently offered less money via a scheme of arrangement, but that needs just 50% of the votes in favour. But that deal for less money, and depend on Origin selling some assets, hasn't found favour with a lot of investors, as we discovered when we spoke with a major Origin shareholder just a week back.
It's really playing into the fact that there's a 50% vote required and not a 75% vote required to get it over the line. But then it's a multiple stage project under the new restructured second offer. So, look, I mean, you've got to convince the large shareholders, or you're trying to avoid Australian Super from exercising their rights. It's going to be a very difficult challenge to get over the line. In its current form,
Well, as expected, today on the stock market, Origin shares have slumped as that takeover evaporated. Have a look at them down, closed down 3.9% to $7.86. Now $1.53 a share less than what Brookfield and EIG offered.